Frank Friedman, we got the May jobs report this morning. 280,000 jobs added to the economy. Certainly beat Wall Street's estimates of, I think, around 226,000. Unemployment right now at 5.5%. So what's your takeaway? Happy days here again?
Well, happier than they probably were a month ago or two in March when it was so bad at 85,000. You know, I think it just shows that there's going to be ebbs and there's going to be flows. But we are tracking for 2.6 million jobs, if you just assume the average of 217. And compared to 3 million jobs last year, you know, not better than last year, but certainly better than any time since the recession. And I think it's relatively optimistic. I think businesses are relatively optimistic.
And they're going to have to be paying more to their employees in the near future. We saw wages rise 0.3%, also ahead of Wall Street's estimate. So should workers go in and storm into their HR manager and demand a raise? Is it that good so far?
I'd hold off on the storming. But it would seem as though at some point the resources that you need are going to have to be limited. And so therefore, when they're limited, wages go up. I don't think the broad economy has seen that. But the advantage has been that there's been a real wage increase because oil prices have gone down so much. So the 2.3% over the last 12 months, good news. Oil prices down, good news. When oil prices start to go up, you know, the real wage growth will probably be impacted quite a bit.
All right, but sometimes on Wall Street, good news is bad news. We saw the 10-year Treasury sell off, and now yields are on 2.4%. Stocks immediately fell on this supposedly good news. So once you view it from Janet Yellen's eyes, what do you think the Fed's going to do with this information?
Well, I think there'll be a lot of talk in the markets about when the Fed will increase interest rates. From a business perspective, I'm not certain it really matters all that much. Businesses don't forecast, they plan. They've been planning for a rate increase for 12 to 24 months. They know it's going to happen. When it happens is not so significant because businesses believe it will happen.
All right, now, of the C-suite executives that you speak to over at Deloitte in your travels, are they planning to invest in R&D? So if they think the economy is going to get better, are they going to start building plants, hiring more people, maybe even bring some money from overseas back here to do these things?
The interesting point is in the GDP, investment in R&D actually was relatively strong. GDP itself was relatively weak. I think businesses got a little spooked by the GDP number. They looked to the optimistic side of the jobs number. I think you'll continue to see investment in R&D, investment in intellectual property. Investment in structures might not be so strong, especially in the energy business. And so what we're finding from our clients is relatively cautious optimism, and they'll continue to invest in a cautious manner.
And you're the global COO of Deloitte, so you're all around the world. So one of the big things that we keep hearing is that U.S. is getting better, and Europe and Japan, they're getting better, but they're still a little bit behind us, which is why they're going through their own stimulative policies.
Right.
All right, so how much further are we ahead of them?
Quite a bit. I mean, our recovery started within a couple, 3 years, really, the real recovery. They were late to the table. They didn't employ, they being Europe in particular, did not employ TARP. Europe did not do the buyback of the Treasuries as our Fed did. And so they're pretty late to the party. But it is getting stronger. I think the worry in Europe right now is Greece and what might happen. China is pulling back for sure. And so we have some big emerging markets throughout the world that we see some ups, like in India, but downs in Brazil and China. And so the U.S. is still the strongest economy.
And then finally, Deloitte is going through something today, I think it's called Impact Day, where you help out a lot of local communities, maybe even add some jobs in those communities. Why don't you talk about Impact Day?
Impact Day is a signature event for us. We're really proud of it. It's the 16th year we've been doing it. We have literally 1,000 different community projects going on right now. In New York City, for example, we have a number of people dealing with preparing kids for education, stressing the need for college, stressing the need you got to get educated, which bears out in the employment numbers, by the way. You need to get educated and you got to go to college. So we're very active in education training, and we are also doing some training for veterans as well. Those veterans who've come back looking for jobs, and we're trying to help them get jobs.
All right, thanks a lot, Frank.
My pleasure. Thank you as always.
And thank you for watching The Street.